Morning all, and welcome to the market view for Thursday the 6th of March 2014. Whilst I'm thinking about it, this weekend the US will be putting their clocks forward to daylight saving, so this will alter the economic news figures that are released for the US in the coming next 2 weeks. I think the next 2 weeks before we actually get around to moving the clocks forward in this country, so keep in mind the next 2 weeks the times will be different for the economic news items. Right, let's crack on and have a look at yesterday's chart, or the activity within the daily chart from yesterday. You'll see that I, if you recall, drew in these Fibonacci retracement lines to show you where the market was likely to trade to should it move higher. It did move higher, and no surprise to me because I've done this for the last 20 years. The market traded to the 76% retracement there, and now you can see it's struggling with the 62% as well there. So no surprise really that the market did this. We've now got a bit of an inside bar situation going on there. So the question is, what if the market continues to higher and breaks through the 62, 76? Well, the first thing is we've got this resistance to the left here, the high of this bar, and then the high of this bar as well. There are a couple of things that we can do, and what I'm just going to do is to spread the bars out a bit here for you first, and then move it over. Get rid of the navigation, go to the markup, and the first thing is we've got the resistance on these highs. So let's just draw in the resistance and turn that off, and I'm just going to drag these across. So they're the first two things, and again let me just come back here and bring it down a bit. There we go. And then if I go back to the fibs, we can see we've got these two resistance areas here. Certainly some selling in this area, although not shown in the volume there, but there was definitely something around that caused the market to stop, and no doubt it was the resistance at what level would this be? Let me just pop on the data window. That's going to be 168, so definitely resistance at 168 that needs to be taken out. But what about on the journey to this point? So let's just mark up 76 from the high of this bar to the low of this bar, and again you can see now, we'll just get rid of the markup bit so we can make this a bit larger. So now you can see from this high to this low. And why have I chosen this high to this low? Well, simply because before we had this, if we start at the right hand side of the chart, you look back to the previous high and the previous low, and this gave us these two fib areas here that we saw the market trade up to yesterday. And what I do is just keep going back to the lows. Now there are some in between, and I will cover this in more depth. I call these rolling fibs, but in this case we're just going for a situation where we can see that it's obvious where the next sort of high and low actually are in the market. So we're taking the recent high down to the recent low, and the market traded up to the 76 before, which then pulled back to this 76, which is now pulled back to this 76. So the market needs to drive through this high here, and then we've got a good chance. But keep in mind, this market, I'm just going to delete these fibs here for you just to make life a bit easier, and just drag this one out. So the 167.64 is a major issue because it's not only the high of this bar where the market struggled, and now you know why it struggled, and of course we covered this in this overview, and the market then pulled back to the low from this high down to this low. It pulled back 76% there as well. So these are just sort of tips and tricks, and I personally have this as a roadmap. So if you were going on a long journey, you want to know where you're likely to, you know, where the destination is, and this is the same with this. So I use the fibs just to give me an idea of where the destination is going to be, and I know that you know, I'm going to end up with a bit of a roadblock here unless we can actually go through it. So again, I just find it really useful, and hopefully my explanation is not too complex, but I will devote more time to this to show you, and of course keep it in the market view so you can see how powerful this tool really is. So let's move on to the 30-minute chart, and yesterday we didn't get any signals in the 30-minute. However, we did get something in the 60, and we can see there the market trading up to that 76% target. The two black ones here, of course, there was a break-even trade here because the market traded through the overnight. These turned black as a result of the market moving higher the next day. So if you held these, then you would have taken the loss. But had you have come out at break-even when the market traded down to these sort of areas and got out before the overnight, then it wouldn't have been a loss. It's depending on the strategy that you employed there. I have no problem with holding trades overnight, but when you've got major support areas, then it's, you have to consider moving the stop to break even, and if you're taken out, you're taken out. So not a lot happening this morning, so let's have a look and see what the reason is behind this. No doubt it's we've got a quiet news day today. Let's have a look. Halifax house price index there showing less than forecast. That's at 8 a.m. this morning. German factory orders. Oh, and then we've got a whole stack of stuff at 9:30. Asset purchase, official bank rate today at midday, and rate statement. That's likely to stay the same, but it will depend on whether Carney makes any announcement to say that he's going to borrow more or borrow less as well. So even though that's predictable, they sometimes come with the odd caveat. I know in the past I'm thinking, oh well, the rates will remain the same, there won't be an issue, only to see the market go 100 points against the position. So watch out for the rate statement. That can be a bit tricky. FOMC this afternoon, member Dudley speaking. Unemployment claims, that's no big deal, that's the weekly one. ECB press conference at 1:30. That could create a bit of volatility in the market concerning the Ukrainian situation at the moment as well. And then just factory orders this afternoon. So we've got a few targets in the daily chart that we can use should the market continue to move higher, and if not, where it was likely to come to the downside. I'll just draw that in for you as well, because you can't guarantee the market's going to move up. So just before I conclude, let's just draw those in as well. So what I would do to find out the first sort of pullback in this area is go from this low. This is the low to the left, sorry, from the right. We start from the right. This is the lowest point. The first, I'll stress that again, the first low from the right of the chart. So I'll click on this, and then this is the first high from the right of the chart, and that's where the market could come back to if it stays on the downside as well. And if it breaks that, then I'll just move back to this one. So I would go from activate it first, from here to here, and just keep moving back like this, because this is still the first high. So all of these areas here will be areas where the market's likely to find support unless it drives through. So these are the areas of support should the market move lower there. And again, I'm just drag these out so we can get rid of the overlay there. So that's it for today. Hopefully there's some information there that you can take and use, as we have done in most previous days. A very powerful tool indeed, not as complex as it looks, and hopefully, like I say, you'll find some value with that. Right, I'm off. I will see you tomorrow, which will be Friday, of course, so heading off into the weekend. Have a great day, and all things being equal, see you tomorrow, and as ever, thanks for watching.